I have realized that a lot of traders overcomplicate the process of price action analysis. So in this video, I'm just going to give you simple steps to follow when you're analyzing using price action. So there are just 3 steps that I'm going to give you. And if you follow these steps, you are guaranteed to be a successful price action analyst. So without any waste of time, let us just get started. So the first step, it is to identify the market trend. So when I'm talking about the market trend, you can see in this example, we have the market moving in an uptrend. So it is just clear that the market is controlled by the buyers. So the strength is in the side of the buyers. So that's the first step. And you can see on my time frames there that I'm having 3 time frames. I'm having the 4-hour, the 1 hour, and the 30 minutes. So I'm not saying that you should use the exact same time frames, but I'm just using this as an example. So this is what I use. So I use the 4-hour as my high time frame. This is the time frame which I use to identify or to determine the strength of the market. In this case, you can see it's an uptrend on the high time frame. So there is nothing that we have to negotiate. So if the market is moving in an uptrend, it means that we're going to be looking for buying opportunities only. So that's the first thing that you should establish, that what am I looking for? Am I looking for selling opportunities, or am I looking for buying opportunities? So in this case, we are going to be looking for buying opportunities only. Why? Because the market is moving in an uptrend. That's the first step. So then the second step, it is to identify the level of the market. So I will go to my mid time frame, which is the 1 hour in this case. When I reach the 1 hour, when it comes to level, I want to know, where is the price at? Is it at the support level? Is it at the resistance? Is it closer to resistance, or is it closer to the support? So in this case, you can tell that we've been in an uptrend. So this is our support, this is our previous high, which is our resistance, and obviously because the price is moving from support going all the way up, it can mean that this is our new resistance. So when it comes to the language of high highs and high lows, you can see that here is our high, and then here is our next high information, which is higher than the previous one, and then here is our higher low. We can compare it with that previous one there. So you can see that the market has been moving in this fashion. So now it is currently on a higher level, meaning on a resistance. And then once you identify that, it will tell you whether you should execute a trade, or you should wait, or you should look for execution opportunities. So in this case, the price is on the resistance. Remember that when price is on the resistance, it usually drops and go all the way down. So here we are not currently looking for buying opportunities. We have to wait. Remember, on the high time frame, it told us that the market is stronger on the buy side. So it means that we should be buying. But then now we go to timing. When should we actually buy? We should buy when the price is closer to the support. So at the moment, it is not closer to the support. It is almost at the resistance. So it means that we have to wait for the price to drop a bit. So it can continue to rise, but we have to wait for the price to drop a bit until we are convinced that, okay, now it is showing us that it is forming something like a low. So I just want to show you something. So again, in the high time frame, if you can see, you can obviously spot that the market is not on the support. Why? Because we have a high, as I pointed earlier, we have a high, and then obviously here the price is now closer to a new high that we are waiting to see. So your role, or our role as traders, it is currently to wait for the price to pull back and give us a discount, and then we'll execute those trades. So let's go to the third step. So now I'm on my lowest time frame, which is the 30-minute time frame. So that's where the third step take place. This is now where you spot entry opportunities, or when we are looking for pattern breaks that will help you to execute that particular trade. So I'm just going to make a simple illustration, because at this current market we don't have the price close to the support, so it won't make sense for me to illustrate with this level here. So I'm just going to make an illustration here. Let's say you're looking for this entry. So what you're going to do is that you're going to observe the pattern that is forming this corrective wave. So here you can see that it is easy for us to spot a pattern. You can see that with a channel, it is just simple as that. And once you identify that particular pattern, our role now, it is to wait for that pattern to be broken, meaning it is to wait for our side to show signs of strength. So signs of strength are revealed through a breakout. So you can see here the market tried to test our level there. It went down and then it went all the way up. It retested that level. It broke that level and then it gave us a retest here. So this breakout was a good confirmation, but then there was also a retest, which was an extra layer of confirmation that, okay, now you can execute your buy here as the price is going up. So that's what you're usually looking for on the last step. You're looking for pattern breaks, you are looking for those entry opportunities, you are looking for those candlestick patterns. So I'm just going to give you another last tip on how you should actually know when to exit your trade. So here, if you can see in this example, let's say you enter around this retest here. When you enter, where was our retest? I think it was somewhere around there. So when you enter around this level here, how are you going to know when to exit before this market collapses going all the way down? So what you need to observe, it is the size of the wave or the momentum of the buyer. So you can see these buyers, they gave us a huge wave and then a smaller corrective wave, and then they gave us another wave, but then this wave was not big enough. The market corrected using a gap going all the way down. So you can see that this structure here is a sign that now, oh, the buyers, they are getting weaker and weaker and weaker because we didn't receive a wave that was bigger than the previous one. So that was a sign that, okay, now I should close my long position and wait for the next one. But here is something important as well. If you are trading in a trending market like this one, remember, identify that this is an uptrend. So if it is an uptrend, you don't jump in and jump out. You just execute your buy here, and then as the market shows you this kind of structures, what you do, you just trail your stop loss, because what you want as a trader, it is to take advantage as long as the market is working in your favor. So you shouldn't limit yourself by actually exiting when you see signs of reversals, but you should exit when you see signs of a major trend reversal. But just corrective waves, they shouldn't cause you to exit a trade. So I believe this video was helpful. Thank you for watching.